Hi, I'm Juan Manuel Herrera, currency strategist at Scotiabank. Through most of 2019, uncertainty over the US and China's trade war and the threat of a no-deal Brexit loomed negatively over markets. The increase in uncertainty over the future of the global economy benefited the US dollar as investors sought refuge in haven assets. Central banks stepped in to counteract slowing growth and risks to the outlook, with fear remaining on the sidelines. As 2019 came to a close, market optimism, or at least a decrease in uncertainty, started making a comeback thanks to a trade truce between the US and China and a temporary reprieve in no-deal Brexit fears. We remain cautiously optimistic that trade negotiations will continue and possibly result in additional commitments from both parties that put the US and China relationship on a better track. With this in mind, we expect that reduced demand for safety will undercut the USD against most major currencies in the coming year, assuming that newly evolving tensions in the Middle East do not develop into a more serious conflict. For the Canadian dollar, the USMCA is welcome but factored into the currency, while relief from US-China trade tensions should be positive on balance as the year progresses and push the currency closer to fair value thanks to supportive interest rate differentials against the US. Canadian growth, however, showed signs of stalling sharply in Q4 and has increased calls for additional monetary stimulus. The Bank of Canada, nevertheless, remains relatively optimistic about the outlook, and markets are not rushing to factor in a rate cut this year. In Europe, the UK election has provided some much-needed political clarity for the British pound by producing a substantial Conservative majority for Prime Minister Johnson. While the Brexit path is now clearer, with the UK set to exit the EU on January 31st, the government has insisted against an extension to the transition period beyond the end of the year, which leaves little time to secure a workable trade deal with the EU. The threat of a no-trade deal departure remains real and may push sterling lower in the near term before strengthening into year-end. Progress on Brexit should also prove somewhat supportive for the euro, but investors may struggle to warm to the single currency while ECB policy remains accommodative and growth trends are soft. The good news for the euro is that the weakening in the eurozone manufacturing sector appears to have stabilized, and policymakers seem to feel that the worst is over. We think the euro's main assets are its low valuation relative to where its fundamental drivers dictate, and the potential for investors to diversify away from an overvalued and perhaps over-owned US dollar. You can find more thought-leading content from Scotiabank on our website, and you can also follow us on Twitter as well as LinkedIn. I'm Juan Manuel Herrera, thanks for watching.